Ladies and gentlemen, welcome back to the channel. We're going to get into everything you need to know on AMC stock here today. All of the data, all of the information, all of these statistics, but also some big data coming tomorrow that is going to really decide our markets. Now, there was some data that came out today in regards to retail sales coming out on Wednesday that is pretty encouraging. It looks like we might have a Goldilocks scenario on our hands. This could lead to even a rise in a beaten down stock like AMC. So we're going to go ahead and get into it here in this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. So AMC stock, guys, it was down like 3% today, give or take. It didn't have the best start to the day, but it surely ended the day better than where we started. And this is the daily chart. Seems like you hit that low at $7.61, started to trade upwards, closing the day at $7.94. Pretty impressive move towards the end of the day. That is good news. Maybe we're getting over this 40 million share sale of AMC common stock, worth about $350 million. Now, you're actually up over 0.5% here in after hours. That is great news, considering this slide could have continued. I estimated it was possible AMC stock could have made its way back to about $7 per share, and if the markets get worse from here, could go even lower. Now, it looks like we might just have a Goldilocks scenario on our hands as far as the data outlook. So let's go ahead and get into that here right now. So I actually talked about this in the last video, but for those of you guys that did not watch or missed it, it goes like this. Consumer spending fell in October according to a new CNBC NRF retail monitor tracking card transactions. This October data tracked more than $500 billion in sales, and it showed weakness in gas station sales, electronics, appliances, furniture, and home stores. And this is basically the estimate of what we're looking at for consensus retail numbers, and it's above 0.5% positive. This survey from CNBC is actually negative, almost 0.1%. So that's good, right? There's two narratives that play out from here. There's two things you need to know as an investor in our markets. No matter what stock you are in, does not matter. You need to know these two things. Weakening data, slightly, that's okay. Data that is really bad is not okay. Why did the markets freak out in 2022 to begin with? It was not because the Fed was raising rates. It was because what effects the Fed raising rates could have on the economy, be it a recession, and could be a quite large recession at that. At least that was the expectation in 2022. Well, now we've got through 2023. Feels like a blink of an eye, but we're almost through the entirety of 2023. And we're just not seeing the economic data deteriorating. We're also not seeing it really get that much worse at the same time. Maybe this is a simpler way to explain it. If we get weak economic data, that just means maybe the Fed doesn't need to raise rates. Maybe rates can stay stable or even start to fall. If you get plummeting economic data, well, that means they're probably going into a recession, and who cares about Fed policy at that point? A recession is a lot more important to markets as far as, fear or what could cause fear, rather than just the Fed raising rates and the unknown of whether we go into a recession or not. So that's something that is important to consider. That's something you definitely need to be watching if you are an investor in our markets. Now, the bigger wild card, because this data should be directly correlated to some degree with retail sales. So I'm not expecting a hot retail sales number. I think that's a pretty well foregone conclusion. The estimate on trading economics, the calendar, is negative 0.1%. Some estimates are 0%. Last month was 0.7%. So if you were to get something crazy high, like 0.7%, 0.5%, markets are obviously not going to like that. That's going to be a problem. If you get something that's negative 0.1, 0.2, 0.3, that's fine. If you look at retail sales in this chart, what you've seen in the past, You've been like -1% back in November of 2022, and markets were actually recovering a little bit at this point as we were starting to say, hey, maybe we're not heading into a recession. Maybe that's not going to happen. So I think you want to see maybe slightly negative retail sales, but not really bad retail sales. And I think that's probably going to happen. So I don't think Wednesday is going to be a big negative catalyst. Now, tomorrow morning, you're going to get your inflation numbers. Now, core inflation month over month is expected at 0.3%. Last month, you came in at 0.3%. Year over year, core inflation is expected at 4.1%. Last month, you were at 4.1% as well. So I personally think core is estimated a little bit too high. I think month over month probably comes in around 0.2. So slightly, not as hot as 0.3. And I think year over year comes in around 3.9. Again, slightly less than what we're currently expecting. Those are my estimates. And I think core is obviously the most important one to be watching here. Your headline inflation is just plummeting. I mean, you're expecting 0.1% month over month. Last month was 0.4%. That would be a really good slowdown in inflation, especially on your headline basis. Your inflation rate year over year headline is expected at 3.3%. Last month was 3.7%. It's possible you could actually come in under 3%. And that would be very, very exciting for markets, especially if core comes down more than expectations and inflation, your headline comes in around these expectations or even slightly lower as well. I mean, that would be like your ultimate best case scenario, considering it looks pretty obvious retail sales are probably going to come in pretty light as well. That's like your Goldilocks scenario that could actually cause a pretty big reaction here in our markets. Now, let's take a look at the expectations for Fed policy. You do have an 80.5% chance of a continued hold, and you do now have a 19.5% chance of a rate hike. Now, yesterday, you were only at a 9% chance of a rate hike, so that's actually up about 10% today, which is pretty interesting. Now, taking a look at the probability for January, about a 69% chance of a continued pause, 28.3% chance of a rate hike. For March, 63.2% chance of a hold, a 9.6% chance of a rate cut, and a 24.7% chance of a rate hike. So you really want to be watching these probabilities really around March, because if you start to get data, maybe inflation's not as hot tomorrow, retail sales come in lighter than expectations, you might start to actually price in a rate cut for March, and that would be probably a good thing. It seems like Wall Street always reacts to things before they actually happen. So kind of like the vaccine stocks during 2020. Some of those companies did very, very well before there was ever a vaccine that was able to be used, right? And maybe they did a little bit too good, right? Look at some of those stocks today. Not the best stocks maybe you've wanted to own over the past couple of years. But point in being, Wall Street positions for things long before. So if a business is improving fundamentally, if things are better now than they were before, something like an AMC, that might actually bring in some capital, especially considering AMC has some debt, they're going to benefit a lot from rates going lower. So that's important to pay attention to. Now, taking a look at the option activity here, the open interest on the call side sitting at 63.19%, open interest on the put side at 36.81%, calls volume for the day at 69.08%, put volume at 30.92%. So pretty dang bullish today as far as retail investors. Hedge funds and institutions, not so much. You had 9 orders totaling $611,000 with a positive order value of 9%. So not nearly as exciting here with the hedge fund and institutional side of things. Now, take this next data with a big grain of salt. I don't believe a lick of what this data is saying on AMC stock, but hey, it's the data and we will continue to go over it. Cost to borrow average at 1.7%, cost to borrow max 1.04%, cost to borrow max at 11.08%. Live short interest, free flow at 10.04%. Short interest at 159.07 million. Days to cover 0.89. Short interest 19.86 million shares sold short. Shares out on loan 20.2 million. Cost to borrow 1.36%. Utilization of 46.71% and a short score of 60.28 out of 100. So the data is actually improving a little bit as of lately, but it's still not even close to where I think the real numbers actually are. And then just taking a quick look at the Stonko tracker data as well, you have about 1,500 calls currently in the money, 136,000 calls out the money. In the money puts at 36,502, out the money puts at 43,773. So you do have a lot of calls out the money. You do have a lot of puts in the money. If AMC stock can make that upside move and you can see some calls go from out the money into the money, well, that's bullish. If you can see some puts go from into the money out of the money, well, that's bullish as well. If you do start to get a market that is starting to position for rate cuts, stocks that are going to benefit, I think AMC is definitely one of those that's going to benefit with an improving business. Now, it sucks because right now we'd probably be like $20 a share if it wasn't for AMC and Adam Aaron just being dilution happy with AMC and giving us that news they're looking to raise about $350 million diluting shareholders. We would be in a much better place right now. That's unfortunately not where we are. So that's a little bit of bad news, right? That's something the markets, I think, are starting to get over, but I don't know if that is going to kind of hold back some of the potential rally we would otherwise see if we start to expect rates are actually going to go lower, guys. So that's basically going to do it for this video. If you look at the RSI, that is at 35.53. So still on the oversold side of things. To see a bounce here wouldn't be all too surprising. Again, I continue to hold strong with, I believe, $7 per share is going to be your support level. And today is pretty obvious as well. You fell in the beginning of trading and then you slowly rally back towards the end of the day. It looks like there's a lot of demand around $7 per share. And let's be honest, anytime you've bought AMC at a 52-week low, most of the time, like 80% of the time, you have actually been able to sell, within a month or 3 months later and make some really, really nice returns. So statistically speaking, whenever you're buying AMC close to that 52-week low, tends to be a pretty good short-term opportunity. Now, what is in store over the long term? Well, I think that is something that we're just gonna have to wait and see how the CPI comes out tomorrow, how retail sales come out Wednesday. I think personally it's going to be bullish, and that could send AMC stock up big time. Again, if the markets did finally get over this dilution. So that's going to do it for this video. Hit that like button, subscribe to the channel, and source your comments, questions, or concerns down below in the comment section. You guys have a great rest of your day, and I will see you in the next one.